With all the buzz about the silver squeeze, there's a lot of chatter now about whether it is real or fake. Do the hedge funds want you to go long, so they'll keep lining their pockets? We're going to be speaking about this with my guest today, Willem Middelkoop. He is the author of the Big Reset, Gold Wars and the Financial Endgame. He's also the founder of the Commodity Discovery Fund, and he joins me now on stansberryinvestor.com. Willem, it's been a long time I've wanted to speak with you, so welcome to my show here at Stansberry Investor.
Thanks for the invitation. Great to be here, finally.
Yeah, well, we have a lot of ground to cover today. I know you've covered gold in your former life as a journalist, but it's interesting that your book, The Big Reset, you wrote this 5 years ago, yet it's having another moment.
7, 8 years ago. I wrote it in 2013.
Okay, but it's having a revival, right? I saw your talk with Max Kaiser where he said you are the Oracle of Amsterdam because a lot of what you spoke about has come to fruition. So I want to talk about that with you, about this moment that your book is having, that gold and silver are having. So let's start with silver, since that's dominating the news these days, and the silver squeeze. We saw what it did to the price, what the people did to the price. A lot of precious metals investors were celebrating, saying, finally, this is exposing the ugly underbelly of Wall Street. While there's another camp that's saying, hey, the silver squeeze is not real. Don't go long silver because you're just going to be putting more money in the pockets of these hedge funds. So how do you see it, Willem?
There's one great example which actually tells you how this will play out, and that's palladium. Palladium is a very small market, just like silver. Palladium was managed, manipulated for years, just like silver, just like gold, just like platinum. If you look at the concentrated short positions, palladium was among the largest position relative to the size of the market for years. Then the physical demand became so large that it overwhelmed the paper shorts. This happened in 2017, 2018. The paper shorts, they had to deliver physical palladium, and they couldn't do that for that price. So palladium went through the roof. The palladium price went up fourfold, and the palladium shorts decreased their position until they were, well, relatively normal. If you look to the situation nowadays, still concentrated short position in silver and in gold, especially in silver, and the physical demand will overwhelm them now. That's the big risk, and that's why there's an emergency meeting called by Janet Yellen, and the CFTC is joining that meeting because I think they have a big problem on their hand, and they've been able to manage this market for decades. And I'm afraid that the palladium scenario will now be unfolding. And that's very, very risky for the financial system as a whole, because palladium doesn't play a role in the financial system. And silver is not playing a role in the financial system. But if silver breaks, then the gold manipulation might break as well. And then you have a real crisis within the international monetary system, because then the dollar system is at risk. And that's what my book is all about.
Okay, so that's really interesting, because we were hearing about the supply constraints with palladium and platinum back in February in South Africa, obviously the largest producer of these two metals. What happens to the price then of palladium, Willem?
Well, the price of palladium went up 4x between 2017 and 2020. And this was due to the fact that in the car industry, there was a shift from combustion engine vehicles towards the hybrids. And in the hybrids, you need palladium for the exhaust system. And this is all a little technical, but it resulted in a huge shift in the market, that there was more platinum needed than was more palladium needed in the exhaust systems than platinum. And that caused a squeeze in the market, a physical squeeze. And that's why the shorters, they really had a problem. This was all 3 years ago, so before Corona. But this is a great example. It's a great playbook for what can happen to silver, and I think what will happen to silver, because central banks can solve each and every crisis, but they can't print silver like they could print palladium.
Yeah.
So you can't solve this problem.
Speaking about sourcing, okay, so for you, the silver squeeze is real.
Oh yeah, and
Okay.
just to start.
Because, many are thinking, okay, it's over. Silver had its run up. We saw what it did to silver miners, but the next day we're back down.
Yeah, but the physical demand is still out there.
Right.
And try to buy any silver in size or even small quantities is not available. And now what they're doing, they push the price down again by selling paper silver. So the paper shorts is increasing. But the lower the price goes, the more physical demand there is out there. So the problem hasn't been solved. Right. They just try to scare the market.
When you're saying they're scaring the market, is it the banks? Is it the hedge funds? Who are you talking about?
It's the bullion banks who have been working as a cartel for decades, because gold and silver are the anti-dollar. The dollar used to be backed by gold, but in August 71, President Nixon, he closed the gold window. So since 1971, gold and silver are the enemy of the dollar. And of course, the US wants to support the dollar system for as long as possible. So if they let silver and gold go much higher, that's a huge risk for the dollar system. And since Corona, the money printing has started to become so insane. Over 25% of all dollars created were created in the last 12 months, that more and more people are starting to begin to understand what's the problem in this system. And especially the younger generation, the Reddits, they are getting the message now, and they are spreading the message. So I don't have to do it anymore. There's the younger generation who takes over.
So I want to talk about the SLV, okay? Because the SLV Silver Trust ETF climbed 7%, its highest level since July. And it notched a high not seen in, close to 8 years. So I've been getting a lot of emails where people are saying, okay, SLV, on fire here. But why hasn't that moved the price of silver to, at least $35, $40 an ounce? Where are they getting the supply for silver? Are they getting the supply of silver? I guess
that's the big question. That's the
question, right?
But most people think that the pricing mechanism for a metal is the physical supply and demand. That's not true. The physical trade is only 1 or 2% of the trade. Most of the trade is done on futures market. That's the paper selling. So if you sell enough silver on paper, you can bring the price down. That's what just happened again in the last few days. The SLV needs to source its metal. And there's another great ETF, that's the Sprott ETF, the PSLV. And the PSLV, if you study the history, it has been quite clear, and Eric Sprott has been very vocal about this, that it could take months for them to get enough silver delivered. I think within the SLV, some tricks are being played, because the amount of silver they need to fund now, it's physically almost impossible to get that many extra ounces of silver within a short time frame. So you see all kinds of leasing constructions, and I don't know the technical details, but this game can't go on much longer.
So Willem, let me ask you, because you're an investor in silver and gold. Do you only buy physical silver then? Would you not touch paper silver?
I'm sitting here in our office. I'm the fund manager of the Commodity Discovery Fund. Here we invest in silver equities. That's 10% of our portfolio. We also invest in gold equities and other commodities. I'm also a private investor, and I had a bullion web shop years ago. I sold the bullion web shop, so I know the thing about the physical business. Privately, I'm still an investor. I buy physical gold and silver and store it, because I know the prices, especially for silver, will have to rise significantly, and just like what happened with the palladium price.
And what also could happen with the gold price, right? What we're seeing happening in silver, can it not happen in gold, Willem?
Yeah, you introduced me and said that I think gold will become the anchor of the new system. Well, it's a little bit more complicated, but what I always say in the Big Reset, we need to find a new anchor for world's financial system. So we need a successor for the dollar, and that's what also Mark Carney, as the central bank or the Bank of England governor, said in Jackson Hole in 2019. We need to find a new anchor for world's financial system. We need debt restructurings. That's another part of the book. So we need to find a solution for the mountain of debt. And I also have the thesis worked out in my book that there will be a revaluation of the gold price. There will be revaluation of gold because of market forces, like we see now in silver. Demand will overwhelm the supply, or central bankers might decide to revalue gold much higher, because that can be a way to solve a possible crisis around the dollar as well. We've seen that in the 1930s as well. There was a gold revaluation in the 1930s to solve the crisis. So a revaluation of gold and silver are coming. We're in the process of that, as you see with silver. And I think gold might be reintroduced within the financial system, and maybe the next world reserve currency will be gold linked, but I don't think we'll go back towards a full gold standard again.
Right. Okay. So on that point, let's take it a step further here, because I know you talk about, the IMF alluding to a new Bretton Woods moment. But when we're looking at this new Bretton Woods, the chatter is really around a digital currency, right? We see China in the process of testing out a digital yuan. There's talk that the euro will roll out a digital euro some time down the road. So this talk of a gold standard almost seems to have died and been overtaken by digital currencies. Don't you think?
You're right. Yeah, you're right. But it gets very interesting now, because as you might know, the IMF has the special drawing rights. It's the IMF money created at the end of the 1960s. China proposed to use the SDR as the new world reserve currency, but the US opposed that. China also proposed to add gold as a sixth currency to this IMF currency basket we call the SDR. So gold could be reintroduced by adding it to the SDR. US is opposing this, but a very interesting development can be seen, because the Federal Reserve is creating a digital dollar. The ECB is working full speed to prepare a digital euro. And of course, the Chinese have been busy rolling out their digital currency. And the idea is now that once we have rolled out all these digital currencies, we could make a mix of all these digital currencies, create a new basket of digital currencies, and then we could put gold also in that basket, or use gold collected by all central banks from China, Europe, and the US as a foundation for this new digital currency. The jury is still out. We don't know what will happen, but it's very clear that central bankers are working on building the foundation for a new anchor for the international monetary system, as the Bank of England governor proposed during his speech in Jackson Hole 2019.
Because your ultimate thesis is we will see a US dollar collapse, right?
Sorry to correct you.
No, please.
To avoid a possible dollar collapse, central bankers need to take the initiative. And I think the US understands this very well. The US might take the initiative together with the IMF to propose to move towards the next phase of the international monetary system. And I think it was no coincidence that Mark Carney, the Bank of England governor, was asked to give a speech in Jackson Hole about the successor for the dollar. Of course, the Federal Reserve can't tell this themselves, so they asked a friend from Britain to explain we needed to find a successor for the dollar. And if you go back to the website of the Bank of England and look for the speech by Mark Carney in Jackson Hole, July 2019, he's telling it all. When you have this background, when you know this thesis, if you read his speech again, it's all there.
So where do you feel gold should be? Gold investors, and we were speaking offline. I've covered this sector for over a decade now. I've felt the pain of gold and silver investors. So there was obviously a lot of enthusiasm and happiness when gold finally got to 2000 or close to 2000 and crossed 2000. But a lot of that energy has, look, we're still high. We're still above 1800 as we speak today,
Yeah.
Willem.
And silver is still 50% lower.
Still, right, exactly. So we have to put things in perspective. But they want that energy back, right? They want to get back over 2000. So what does it take, and does it happen this year?
The core is not that we need gold. The core is without gold, without a intrinsic backing, all paper currencies in history have failed. I have an appendix in the Big Reset. Actually, you can download it. It's for free at our website. And I wrote down all currencies which have failed in the last 300 years. It's I think 15 pages. So we know from history 250 currencies which weren't backed by gold or anything else or silver. They all failed in the end. And we're now in the process of debasing all our currencies worldwide. And people are beginning to move. They're buying Bitcoin. It explains the rise of Bitcoin. They're buying old paintings, old cars. They buy everything the government can't print, including real estate. And once the pressure becomes too large, these central bankers who know this very well, who know this history of fiat money very well, they will take the initiative again. They won't wait for a full collapse of paper currencies. They will revalue gold or do something else to save the system. So my book, The Big Reset, is not a book which tells you the world will come falling down. No, it's a positive book. It tells you that we might morph into another phase for the international monetary system, but then we need China to be included into this new design.
On the note about China, actually, you just made me think of two points I want to ask you. What are you hearing about China buying silver? Because multiple sources are telling me huge demand coming out of China for silver.
But I think that's not from officials, from the official side.
No.
As you know as well, silver is a much too small market for the official sector to get involved. There's not a central bank in the world who owns a large amount of silver, but the central banks in this world do own a large amount of gold. And we know why, because you will need it for the start of a new monetary system. That's actually on the Dutch website of the Dutch National Bank. They put it there in full writing. And the fact that Russia and China and actually all countries east of Germany have been adding to their gold reserve since the start of the great financial crisis in 2008 tells you a story. It tells you the story that central bankers are hedging themselves against the risk of the current dollar system. So I don't have to prove that gold will become more important. Just look at what central bankers do instead of what they say. But silver is not important for central banks, but a silver crisis can lead to a gold crisis, can lead to a dollar crisis.
Do you think central banks are buying Bitcoin?
No. I asked that question on Twitter. Please prove to me that a central bank is buying Bitcoin. And then people mentioned that in Iran, they're mining Bitcoin themselves, but there's not one central bank who's actively buying Bitcoin in the open market. It could happen one day, but central bankers are a club, they're all in the same club. And they know if they start supporting Bitcoin, they're killing their own financial system. So that's not an act you have to you can imagine a central banker will do. Maybe a freak country like North Korea or maybe Iran, but in general, they will avoid supporting Bitcoin.
I had a professor on from Italy yesterday who brought something to my attention, and I'll ask you this if you think this is interesting. Janet Yellen, former Fed chair, now Treasury Secretary. We see Mario Draghi, former head of the ECB, now likely to become Italy's next prime minister. And I don't know what this tells us, but I find it interesting.
Well, I always say the financial industry used to support the real economy. You know, they were servicing, banks were servicing the real economy, the other companies. It's now the other way around. The financial industry became that large, and the actions, the QE by central bankers is now that important that they control the whole economy. The whole economy is now dependent on the actions of central bankers. And that's why you see that more and more central bankers are moving almost into political positions, because they're calling the shots now. And we need them to call the shots, because I'm not a supporter of the QE policies, but without it, then we're really doomed.
Willem, I guess just to wrap, I want to talk mining stocks with you, because you have your fund. You have about 100 companies in this discovery fund, mainly exploration companies, correct?
We're specialized as one of the only funds in the world on exploration. That's about 60% of our fund.
So most of the guests I've been having on are optimistic that mining stocks, gold mining stocks, and the silver miners will outperform the physical metals this year. Do you agree?
If we look at last year, gold was up 24%. The GDX was up, was it 27%? So there wasn't a big outperformance. We were up 85% because we concentrate on the smaller companies making the big discoveries, which leads to higher yields. But normally we see that gold and silver miners are increasing 3 times as much as the underlying metal. And I think we're still in the very early phase of a recovery of the precious metals markets. So the gold and silver mining are still lagging compared to other bull markets. And I think there's a huge run to be made. And I think it will start very soon, maybe even next month. We're in the end of the correction now, which started in August. We need 1 more week of capitulation. I think that will happen next week. And then we'll see the start of the next phase of this new boom market. And then you can expect the gold and silver miners to move even more than we have seen in the last 12 to 18 months.
Do you see a major stock market correction happening, Willem?
Not anytime soon, but of course, the move of general stocks is getting very extended. I think we'll get one strong move up for all markets based on all the money being created. But I think a severe correction for major markets will happen in 2022 or 2023, not this year.
When you're looking at companies to include in your fund, what are criteria you like? What do you like in a company?
Big discoveries, small market cap, small company making a grassroots discovery, and then we go in right away. We build up position up to 1 million and we ride it. Last year we had great gold, great discovery in Australia, up almost 2,000%. Our large position, second large position, the grey mining. Huge gold discovery also in Australia. So that's what we like. But we also look again now to the lithium place, the nickel place, the battery metals place. I think there will be a huge hype because the demand for EVs and batteries is really starting to kick in now with all the support and all the stimulus and all the changes in government now with the new administration in the US. I think we'll get a greener administration in Germany. So there will be so much support to make everything green. and we need a lot of metals, as you know. So that will be big bull market as well.
So if I had to wrap here and narrow it down, say, you know, Willem is bullish on these three sectors. Is it, well,
precious metals,
silver and gold? Yeah.
Battery metals. Yeah, precious metals, gold, especially silver, and platinum, because platinum really is really cheap right now, especially compared to palladium, because palladium had this big run. So we have the precious metals, and then we have the battery metals, copper, nickel, and lithium as well. Cobalt is getting less important because we have new techniques now which need less of cobalt in the batteries. And then as a third sector, I would say uranium, because in uranium, we could see a real revival as well. A very small market, tiny market, very long correction. And I think that market will be very strong for the next 5 to 10 years.
Okay, we will see. Willem, like I said, your book, The Big Reset, having another great moment here. Are you planning to release another book soon?
No, I would love to write a revised edition, a second revised edition of The Big Reset, because so much is going on, but I don't have the time for it now. So not on the short notice. All
right. Well, it's available, I know, in many languages on Amazon, and I wish you continued success. And I thank you for this great conversation. It was really good. Thank you.